Myself, Tanvi Shah, a very warm welcome to all the attendees for today's webinar, which is the topic is geopolitical uncertainties and the monetary policy in a shock-prone world. As we all are aware that we are living in an era of heightened global uncertainties, that is geopolitical tension, supply chain disruptions, inflationary pressures, and financial market volatility is huge. As the world economy becomes more interconnected, central banks are being tested in ways never seen before. Traditional monetary tools alone may not be sufficient as of now, so policymakers are now rethinking to framework a better policy to respond to the global spillovers that we see. Today's discussion will explore how monetary policy is evolving to tackle the external shocks, whether central banks should adapt more outward-looking strategies, and what should be the future holds for the economic stability in an unpredictable. Now, I had like to introduce our distinguished speakers for today's session. We are honored to have Chartered Accountant Mr. Viral Shah with us, who is the founder of Baid in Finserve. And with his extensive expertise in structured finance and capital markets, he specializes in impact investments and private credit solutions. So before founding Baid in Finserve, he led the structured finance vertical at LKP Securities Limited. So his insights on today's discussion will be very valuable. So welcome, Mr. Shah.
Thank you for having me here. Thank you for the warm welcome. Happy to be here and give my best insights.
Surely, sir. Moving on to our second speaker, he is highly respected Professor Dr. SNV Sivkumar from K.D. Somaiya Institute of Management, Mumbai. With over 3 decades of experience in macroeconomics, public policy, and corporate governance, he has supervised numerous doctoral scholars and published extensively on economic frameworks. His vast knowledge on monetary policy and regulatory structures will provide critical perspectives on today's topic. So welcome, sir.
Thank you.
Thank you, Professor and Mr. Shah, for joining us today and devoting your precious time and perspectives for this timely dialogue. We are honored to have such accomplished experts joining us today and to share their thoughts on navigating the global uncertainties and the evolving role of central banks. Without further ado, let me hand it over to our moderator to kickstart this insightful discussion. So, Ankit, Baid, over to you.
Thanks, Tanvi. Thank you so much for a warm welcome. Hi, Sivkumar sir. Hi, Viral.
Hi.
So let me start just an uncandid conversation. Like a decade ago, right? Probably the amount of information consumption a human used to do during his lifespan, the same amount of information is available to him in just a click, right? So it becomes very difficult for him to, kind of extrapolate those information, digest the fact that which is true, which is a propaganda. How shall he, kind of maneuver this entire journey of uncertainties? So what we are doing here is we are with such quantum of information available to a common person, we are here to democratize the recent happenings in the most simple yet and from a different lens point of view. So as a name of the webinar suggests, that geopolitical uncertainties and monetary policy in a shock-prone world, right? So we try to break it down from the recent happenings to the backdrop and the way forward. And thanks, Tanvi, for the warm introduction. So firstly, Viral, I'm definitely happy to have you here, just because it makes this thing interesting that this discussion was something that connects on the matter which we had a last conversation on. And Professor Shivkumar sir, I feel that again I'm back to the college days, attending your lectures, and it gives me a nostalgic feeling. So it has always been a privilege to hear you, to understand you, and hosting you on this webinar. Thanks for your presence, both of you gentlemen.
Thank you.
So let's kickstart this webinar just by going or maybe getting into the backdrop of the history, that before we start with the trade wars or uncertainties, right? So why is tariff so important as a negotiating factor, that we have seen US implementing tariffs and schooling economists ki if you don't follow this, we will impose a tariff on you. So let's dwell into a ingredients of mocktails which created such uncertainties, and what puts US in such a commanding position. So Viral, I would definitely love your insights on it.
So I think your question pertains to something which lies in the history of the United States. Okay. They themselves, in the last uh, 5, 7, 10 decades, has established them as a capitalist. Okay. The primary aspect is this is going to be a consumption economy, and we are going to dominate the world by consumption. Tell the world how to consume, what to consume in the capitalist manner. And when you're a capitalist economy, they were the first ones. They pounced on, and the dollar backed them to give the money to people. Like, here's the dollar, enjoy the dollar. Everybody loved buying the dollar, getting funded in dollars, getting exporting to the US. It was such a booming economy. Dollar created its strength. Okay. And then they were supposed to be backed by gold. They were supposed to be doing all that. We all know they've gone printing it. The value of the dollar has dropped. The crypto system is in. The value of crypto becoming the new parallel economy. Dollar lost its value in the course of the last 10 years, as you're mentioning, last decade. Um, uh, from Trump capitalist to Biden being a, a socialist, like to try to control that with the COVID effect, and then again Trump now. Okay, so you do see those things along with the COVID in between is where everything that we are seeing today, as on date today, as tariff wars, as everything, is all linked to this timeline. Um, it's their dollar, weakening of their dollar, beginning of the drop due to the high debt level. Okay. That's the timeline that you should focus on. And I'll try to keep my conversation off on this timeline and in this framework. So the dollar weakening started clearly as a social understanding that they're extremely high on debt. And at such a high debt to refinance, it's kind of be a difficult thing. But good for them, in the hindsight, COVID happened. And they were able to masquerade the entire dollar weakening into a propaganda where they're doing great, and they started printing more dollar to take care of the COVID related problems. And that led to their debt to reach at a god high level. This is unheard of, unsustainable, and because of this unstable and uncertain thing, the inflation and the global inflation is at its peak. Okay, minus the dollar printing, we would not see such inflations in any of the economies. What do you say, Sivasa? Am I correct on that part?
Yes, yes, yes. You are
Yeah.
absolutely right. In fact, thanks for setting the right agenda.
Yeah.
US has gained its dominance through some liberal economic policies, and they have built some kind of a charm towards the US dollar. So countries started, gaining some kind of export surplus, and they were all excited to sell their surplus produce. In fact, they started designing their internal manufacturing policies in such a way that US has been kept as one of the major countries, major partners to sell their surplus either as merchandise or in countries like India or South Korea or Japan, these services. So it is some unmissable kind of an economy US has been, which has been partly we can call it as a success that US has got in terms of convincing various other countries that this is a credible economy. This economy is poised to become larger and maintain its the top position among the largest economies in the world. So there is a kind of a confidence that all countries have started, gaining. So you are absolutely right, and the kind of too much of liberal or generosity that it had either during the COVID or global financial crisis or elsewhere, wherever the U.S. economy was facing some kind of internal or some external troubles. Now that has put some pressure not only on Fed and local institutions in the United States. It has also had certain adverse effects on other interconnected economies, the kind of globalized world we are living in. So we can't wish away while we are gaining the benefits from such large economies like the US. When US goes into some kind of a trouble, we can't wish away that we de-link ourselves for a moment, and if things revive, then again we'll link it back to the US's economy. Is not done. So therefore, the sufferings also we had to face with a pinch of salt.
Correct.
Yeah.
And I think to correct all these measures, tariff, their strengthening is mandatory. I think Trump's mandate is clear, is to strengthen the US dollar, get economies back, do it the right way. And when a nation as big as US is, the big daddy, their the GDP is humongously big. We like 10x of where we could even want to be as our goal. Um, um, Whatever they do is to protect themselves. The tariff is the start of it. They will be reducing taxes. They want the capital to move from everywhere in the world to back to them, and which will make them strengthen their weaker parts. They've laid strong pillars, and I think those need a repair now. And that repair and maintenance work is going on, and that repair and maintenance is just uh, making this entire global world go into a chaos and turmoil. But it is important. We would think it's a short-term pain. We have to think it as a short-term pain, where if the big daddy falls, if the dollar falls, I think we're all in a big soup. So in the hindsight, maybe 2 years or 5 years later, we'll be all happy that Trump did this and made sure that the dollar and the debt of US remains clean. The housing market in US does not fall. The inflation remains in control, and the big daddy remains the big daddy. China would want otherwise. Some European countries would like to see US fall. But I think it's best for an emerging market like us, is extremely dollar dependent, for the big daddy to remain as stable as possible. Yeah.
So well, maybe I would also kind of democratize this for our participants, that when Viral, you had mentioned that US and a consumption power, and what Shiv Kumar sir had mentioned, that the policies which were adopted by US then. So in terms of policy, it was pro-growth policies, quantitative easing, printing of money, low inflation. So there was ample amount of liquidity. And when it comes to consumption, so I would have a backdrop over here. Maybe would love to, take this conversation way forward in this tone. So I guess in 1970s, it was, I guess, President Nixon's tenure in the US. So this is one of the most widely accepted system, which was Bretton Woods system, right? So that was like your gold, which dollar is linked to the gold, and other currencies are linked to the dollar. So dollar always had a stability, an underlying factor with the movement of the gold. But there was also caveats that I only can print as much dollar, as much gold I have in my vault. So in 1970s, we know that US was berserk. US was, becoming a consumption power. We know US was funding the Vietnam War. So US needed money. US wanted money to do all kind of stuffs. So and pro-industrialization, funding of wars, to acting as a big daddy for all the other major economies. So then what happened is other major economies felt that US is printing ample amount of dollars, and once you print currency in ample, what happens is it reduces the value. So because people had their reserves in US dollars, so they saw the value depleting. So then what President Nixon broke down the Bretton Woods system. Ki, boss, let's do one thing. Let's de-link the dollar from the gold. Let gold be driven by the market forces, and let dollar find an underlying base factor. So US was very smart then. US knocked Saudi's door. US told Saudi ki, boss, you export petrol to the world. I want you to export the petrol in dollars. Okay, so that the dollar has a strong base right now. And because the entire world from China, Japan were becoming pro-industrial, they needed crude oil. They wanted to import as much crude as they can, right? So to buy the crude, they needed dollars. And Viral, backing your point that they were going flushing on printing of dollars. So US was able to, kind of generate demand for dollars and also supply. So the inflation was not seen. I was printing dollars. I was letting the other countries access those dollars. And also the countries which wanted to also import, they didn't have dollars, they bought US debt, US treasuries. So the more the demand of treasuries, the lesser will be the yield. And US was able to borrow at lower cost as well. So then what happened is, as Shiv Kumar sir, you mentioned that they adopted a kind of policy where they wanted to outsource manufacturing to other countries where there was cheap demand, cheap labor, and they reduced the tariff. So when people become so dependent upon US that their 1/3 or 2/3 of GDP exports are to the US, and US didn't gain this power. People handed this power to the US. Ki boss, I can consume, I can make my people rich. You export to my country, I will give you the dollars, and you reinvest the dollars back to the system. So this entire global order was being set by the US, and that is it. That is one base factor when I asked ki what is giving US so fundamental strong leverage. Ki whenever an economy I see that goes against US implements tariff. Venezuela, Iran, Iraq, these are European Union, Russia. So people abide to US because they know ki US is a major integral part of their GDP, and integral part of the GDP and services come from the US. So Viral, on to you again, and even Shiv Kumar sir, I would love to understand if US has set such a good global order where it is becoming a big daddy. Everyone wants to be a and king and rule the world. Why is US changing the global order? Why will I challenge my own alliances? I have an alliance with UK. I have an alliance with Canada. I have an alliance with European Union, the NATO. I'm breaking all the alliances. At what cost? It is very difficult for the people to understand, even me, ki what is making US take this step? Why is it going against the alliances which it built in last 3-4 decades? On to you.
Okay, let me go first. I think inflation is the key driver. Okay, we've inflated too much in the past post-COVID era. It was US after the 2008 crisis was at almost 0% interest rate for the longest amount of time, and the major reason to shift to a higher inflation interest rate was because to control the inflation that COVID started. Okay, when such high inflation comes in, you got to control a lot of things.
Right.
And what was leading simultaneous at that same time was the housing, the rise of the housing market again in the US. Okay, when such global order, huge amount of in the extreme chaotic situation of COVID, certain things happen. US was very clear that we are losing the value of the dollar. Okay, and if we don't strengthen it now, it'll be too late and we'll kill the dollar. And because to control the inflation and to ease and accelerate the growth, as you were mentioning, the growth acceleration was extremely important. A lot of printing of debt happened. The debt ceiling had to be increased multiple times whenever it was breaching. It got inflated money printing never stopped. Ukraine war happened. They decided to fund the Ukraine war, and to fund that also more printing happened. Um, the dollars, and as you are correctly saying, the more the dollar supply, the weakening of the dollar. But they can't let that happen. The dollar weakening is a sign of a big trouble. Okay, it's a bigger crisis than anything that can happen. That's the amount of supply of dollar that is in the system. Now, if you let the biggest and the most important thing fall, what you'll sink along with everybody. So I think this is a corrective measure of what the tariffs are coming in, the policies that Mr. Trump is currently trying to impose rather than just apply. He's imposing it. It's not kind of a constructive discussion between two nations that is happening. It's kind of, I say it as the rule. That's kind of imposition that's happening with global economies on the tariff side.
Yeah,
And these,
Mr. Viral, in other words, not negotiated settlement. It's just
yeah,
a dictation. Yeah.
it's a dictation.
Yeah,
It's a
yeah.
dictation or a text on a Twitter. It's not even
True.
an official note
He's
in
not
the.
bothering for any other nation.
He's not bothering for his own teammates.
True.
The trade guy and the tariff guy sitting in the Congress and in the Supreme Court answering, and this guy is tweeting the other way around, saying that we'll do this around.
Correct.
And he's kind of the whatever he is what he is. And what he is doing is to um, get the debt ceiling and refinance the debt. It's been time and time that we all know that debt needs to be refinanced, and the interest payment is too high on that debt.
Right.
The interest rates need to fall, and he's just setting the principles right, his order right, so that the money flow comes back. If the money flow comes back to the US, it's get easier to refinance that. The bond yield has to come down. The US bond yields have to come down. He's just trying to get the right core for his economy, so that all these things happen. And if those things don't happen, the US economy is in a trouble. They'll have to print more money. They'll have to keep increasing the debt ceiling. They'll have to borrow more, and the pain only increases in the point of the balloon getting too larger. He's just trying to shrink the balloon. He's understood the problem. He's understood what his country is facing as a biggest catastrophe. The whole world might face this catastrophe, and he's just trying to shrink the balloon. He's just trying to, and U.S. Fed. I have a great respect for Mr. Powell. He tried for the softest landing for a recession. Okay, and now because of Mr. Trump, we soft landing is off. Okay, they're pricing it as a 50 to 60% probability now. The biggest economist in US, as a pricing of putting a probability to US going into recession as 50% probability, which is the highest after 2008. The problem is there, and he's trying to address the problem with a spearhead and not with a pen. He's not negotiating. He's gone with a spearhead, saying that if I die, I kill everybody along with me. And the only person he has to kill is China, because the only winner who comes out when US loses right now in global order is China. So, and that's what in tariff war is what he's saying. He has to only fight with one. Okay, he does not have to fight with anybody else. And um, everybody has to lose while US and China fight. And that is the problem that we have to address, and we have to look for, keep our minds on. And if the global order, biggest economy is going to go into pain, is fighting with the second biggest economy. And this is what we are seeing. So we got to take a back step when two big people are fighting, and just let them complete the fight, let the dust settle. And when the dust settles, I think the global order will see a new era of how trade happens. And the new era is going to be set in 2025, 2026. We are not far away from it.
Perfect.
Shiv Kumar sir? Yeah.
Shivkumar sir, if you want to add some insights on this.
I would like to supplement, while I totally agree with Mr. Shah. See, various countries, they have a sense of gratitude towards the US's economy, uh, because the other global institutions of IMF and World Bank, the way various countries, they have taken the benefit out of this IMF for economic stability, exchange rate management, and so many other internal conditions. Behind the scene, for these global institutions, it was US which was playing a very major role, major constructive role. So these countries, sooner or later, have started becoming, in our colloquial parlance, fans of USA. Some loyal friends, so to say, following the footsteps of whatever has been dictated by the US. By and large, they were trying to manage their own internal political conditions by talking to the opposition, getting certain trade policies, or some cuts on public sector enterprise, or allowing on liberal terms the FDI, right? So on. So this is more like, and in case of some ongoing wars, approximately 8 to 10 wars are always on after the World War II till date, small, medium, large. 10 to 12 wars on any given day, they are underway. Now, these may be declared conflicts or maybe otherwise, right? So when wars take place, there will be some, destruction. So for reconstruction and bringing back the life of people who are displaced, it's a gigantic task for the affected countries, more so at that point in time. So the World Bank assistance, either restoration of the damaged physical infrastructure, providing some water, medical help, so on. Behind the scene, it is the US for which they require to be more liberal in terms of managing their money supply. Unlike with some 170, 180 other countries, which generally are engrossed in minding their own internal business, US has to look after the almost many parts in the world. I won't call it as the whole world, but many parts of the world. US it started owning up that responsibility. Now, a second aspect is that US look at the way they are honoring the economic policies still very recently, prior to Trump 2.0. If any past president or past Fed chief has taken a stance in terms of maintaining the economy over the medium run, the successors, they honored these policies. So one more aspect, one more good aspect that we can get from the US, in spite of the current criticism, is that if at all there is one financial instrument that is nearly 100% sure and secure, it is nothing but the US Treasury.
Treasuries.
Treasury bills, if any country makes investment, it is almost 100% sure that there will be no repudiation under any circumstances. That's the kind of a confidence. In terms of forex management, many countries they prefer putting their forex with the US, buying the US treasuries. Going back to the title, and again revisiting the title, this post 2020 has become more like a tightrope walk for our central bank, RBI. Now, why I would like to call it as a tightrope walk is that on one hand, they need to be handling their political bosses, the way we call them. In
True.
fact, RBI is an autonomous institution on paper. It has got a complete authority. It is called a monetary authority. of the country, again as per the Act 1935 and on paper. But they also have to oblige their political bosses. From time to time, that has become a point of contention or a bone of contention. As you may, some of you may have listened to this Dr. K.P. Krishnan, who recently retired as Union Secretary Skill Development, Government of India. And he gives, he's associated with the ISB Hyderabad. He gives some sessions which are available in the YouTube. One can see this. How difficult it is to handle the, conflicting objectives or expectations on the Reserve Bank of India if they stick to the principles of economics. Then somewhere, the political compulsions, they are compromised. And the politicians, whether it is the FM or whether it is the most popular cabinet ministers of a given time, it could be, I mean, the point that Dr. K.P. Krishnan was referring to in one of the recent episodes was how difficult was. He has taken the name, so I don't hesitate in live seminar to take the name. It was during the tenure of Dr. Bimal Jalan. And when Mr. Mr. Vajpayee was the Prime Minister, and Mr. Advani, Ms. Sushma Swaraj, and a few others, they were some important ministers in that government at that time. The RBI governor was summoned by the political leadership to New Delhi. So he went and made a PPT presentation about what is the current exchange rate at that time. It's about 20-25 years back. And what the RBI is having in mind in terms of maintaining this rupee dollar exchange rate for the next 3-year to 5-year kind of a term. The political bosses were unhappy, and in fact, they he did not use the word walked out, but they said, yes, we have understood your thinking, and we are not, convinced with that. What made late Sushma Swaraj to make that statement was that at that point in time, the way the PPT presentation and the historical factual information about USS dollar vis-a-vis India's rupee and USS dollar and Pakistan's rupee, Bimal Jalan has made it very clear that Pakistani rupee was stronger than India's rupee. That has irritated some politicians of that time. So he says a fact remains a fact. Later, I think this is also there in that YouTube clipping. One can watch it. Given the maturity, the Prime Minister said, Bimal Sahab, aapko chai pilane ka bhul gaya hai, aap rah jaiye. Other ministers have got some engagements. Just have a cup of tea and leave this, chamber. During that conversation, while having a cup of tea, Prime Minister seemed to have said that, even if it is a fact for you or economic, requirement, we, the politicians, have some emotive considerations. We can't just accept if somebody says that Pakistan's rupee is above India's rupee or is more stronger than Indian rupee, even if technically it could be correct. So it is the same political leadership, that is, he was referring to his own party personnel without taking the names, who collectively we were arguing for a weak India's rupee in order to promote India's exports when we were in the other side, that when we were in the opposition. Now that we came to power, the rupee, technically you may have a number of challenges to make it strong. And when the rupee is made strong, the exports suffer, then the politicians will question the RBI as to why our exports are not picking up. So this is how, technical and political considerations have to be simultaneously matched, and therefore it may be better said as a tightrope walk, balancing these two. Technically, you have to be correct. You can't compromise on your principles. After all, it's a profession. Also, you have somebody to report to, and they would ask you certain tough questions if things go wrong. So quickly about the monetary policy in the Indian context, it has been by and large a successful, policy making all along. Except that in the late 70s, India has registered the highest recorded inflation rate of around 28%. Barring that, our inflation rate has been a single digit. That is a great solace. Now, basic functions of RBI would include, it has to have a sound and credible monetary policy to start with, banking regulation, currency management. It's a banker to the government, both union government as well as state government. The banker to the banks, custodian of foreign exchange reserves, and also maintaining the forex within the range for which it is the best judge. What should be that range is never pre-announced, like India's nuclear policy. Now, promoting the last one is of late, in the last 10 years or so, the present government is emphasizing on inclusive banking. So into the RBI's major agenda got added is that of inclusive banking. So given this, end of the day, inflation can be taken as a monetary phenomenon. Whatever may be the issue, unless there is enough money supply in the economy, inflation cannot happen. More so, hyperinflation is ruled out. Now, why we would see sometimes countries such as the US would be facing recently, about 2 years back, post-COVID, 40%, 40 years record inflation has reached, is because, when you are concerned as an economy to poke into your nose into various other countries' internal or inter-country or international issues, you end up facing some local challenges of inflation this way. So whether it is a Vietnam war, whether it is Gulf war, whether it is Iraq-Iran war, whether it is a Ukraine-Russia war, or any other war like, the Israel-Palestine war, or whatever war, or if China is likely to show some aggression in attaching Taiwan, maybe after 2-3 years from now, this is going to cause some $10 trillion, $10 trillion US dollars on the world economy. This is what is the prediction. Now, US is again readying to, neutralize or counter. So the moment you start getting involved into those many international affairs, almost at no point in time the US policymakers can breathe ease. Then a war can be fought with the use of financing. So war financing is inflationary. It is time tested. So this is something that is something that the US is still not able to depart from the tradition it has set for itself. So war financing is very, very costly. Many countries, including US itself, after the Gulf War, we have seen what kind of challenges it has posed. So these are some of the, and then liquidity management is one more aspect that countries around the world, and more so in India, which is a developing country, we have to be bothered with the liquidity management. Yeah.
So you mean to say that the monetary policies which were structured previously, they were more of inward looking, more of trying to please the political bosses,
Authority, yes.
and try to please financial markets. Say in US, as Viral had mentioned, that US is a only nation where there is high financialization. Okay, so there's a concept called Fed put and Treasury put. So whenever the markets react, Fed comes as a superhero, try to calm the market down,
Savior.
and, bring in a bit of serenity in the market,
Stability.
solitude. So that's what I believe, that your point is totally right. That right now what Trump is doing is like enough of this gimmick. Boss, I'm nowhere to print money. I don't want the dollars entering to the system and inflating my asset prices, because we could see inflation. But inflation was not in CPI. Inflation was in asset prices like stock markets. Inflation was in real estate. Inflation was in housing, which had happened in 2008. So Trump is rightly doing that he's trying to, kind of engineer volatility. If I would precisely use words, he's engineering volatility, and they are being very vocal for the first time that they are telling that, boss, we will have short-term pain. We'll have to suffer for a better future so that we can keep dominating, we can have that upper hand. So what I believe from your insight is that monetary policies right now are no more of inward looking, no more of supporting their this thing. They are like outward looking, ki how what all factors might or might impact their internal economics, and depending upon that, I feel that the monetary policy is being shifted from inward to outward looking, or maybe mixture of both.
So there is a reason why this has become outward looking. Trump, by its true nature, thrives in chaos. I
True.
repeat that Trump, by its own nature, thrives in chaos. He does not like the world order to remain in the world order. And uh, by just imposing chaos, he knows that people will come on the negotiating table with him and will allow him to reset the order. So it's inward looking for him, but by showing an outward looking face.
Right.
Monetary policy can be outward looking for a very long time. It will create these inflationary pressure, as Mr. Sivkumar added. You got to be inward looking to control inflation, to control asset prices, to control your chaos within the system. Let the geopolitical situation be outward looking. Currently, what has happened is there has been a camouflage of the monetary policy and the geopolitical situation. As Mr. Sivkumar again explained, that they have to answer to the bosses. They've mingled together. They're supposed to be two different parties. There has to be a fiscal policy governed by the government, and there is a monetary policy governed by the Fed, the Reserve banks. They have to do their jobs as independently as they have to, but they mingled to create a common agenda, and that common agenda creates problematic because you kind of have opposing views, but you got to come in a middle way. So within the economy, there has been a compromise. Okay, I would not say negotiations, compromise. Mr. Modi would like an inflationary policy. He would like to reduce taxes to half, but that will just be a problematic situation. Money supply would go abundant. Trump wants his taxes to come down, but amount of dollar that will bring in the system will cause a tremendous amount of inflation chaos, and the inflation is what the Fed is trying to control, the RBI is trying to control. Imagine what tax rate does, a reduction of tax rate does. Imagine what tariff does. It all adds up to inflation at a very fast pace. And here we are talking about reducing interest rates, and all your actions as a government is about
Money supply.
inflation. Imagine now fighting two problems at the core level with completely opposite parameters. This is what the problem is. And while this is your internal problem, you're trying to say, let's fight out while the internal problem gets solved. So it's kind of putting a blanket over your internal problems while it's happening and create an outward pressure. US has always done that. When there is an internal problem, they will go out in the world saying that here is the problem, here is the problem, here is the problem. They'll defocus from their problem so that the problem, nobody points fingers at them. But it's
Well,
I view your opening line of the statement is the information now is available at a click of a button. People
true.
understand that what US is doing, and that is what is being deconstructed. Yeah.
Well, gentlemen, since we have a limited time constraint, I guess 50 more minutes. So we'll try, skipping few questions, but also coming to a specific question, which is, the core focus of our topic. That where do we see the tariff wars right now, and if at all this is something, this volatility is something we'll have to live for further number of quarters or years, and who is to win, who is to lose, because there's a concept called Nash equilibrium. So I would definitely love to hear from Shivakumar sir as well as Viral, and probably try concluding in that span of time.
Yeah,
Me?
yeah, if you could, please.
Okay. See, this is both addressed to the panelists as well as to the audience. There is a gap between the communication about the championship of globalization and the reality. You know, if we watch the 50 odd years of globalization experience, uh, 1970 to 2022, US is not and certainly not among the top few. I think some of us may be wondering what exactly I am wanting to say.
Yes, even I'm
US
wondering.
is not at all among the top. Okay. You would wonder to know what exactly is the rank of US. The first few ranks have been occupied by Netherlands, Switzerland, Belgium, UK, Germany, and US finds its place at 27th rank. Okay. The
Wow.
second largest economy of the world, and it has succeeded in mobilizing the capital from all major countries around the world into China. China, in terms of the globalization, the rank is 78 and India is 90. Now, why I have jotted down and reading these 1970 to 2022, the globalization rankings, wherein I am highlighting about US's rank as 27, is how well are we integrated the communication to the world may be different, whereas the reality could be different. When you are integrating into the world economy, you would like to sell your goods, you would like to buy their goods, you would remove many of these trade barriers, you would attract the investment, even for the prominent employment opportunities, you don't differentiate between non-Indians are ineligible to apply, you know, that kind of a restricted mindset. If this is something to do with the talent qualifications, you are to be an equal opportunity employer. In that, US is following by and large this principle for many of the top positions, no matter where you are coming from. Do you possess this qualification? Do you possess these skill sets? Have you got this relevant experience? So you are wanted. So this many countries today, they are just, you know, trying to use, I'm not saying utilize, trying to use this globalization to their benefit. As somewhere, you know, even Ankit has mentioned, I give one and I take 10. This kind of attitude is not correct. You know, in any, there has to be reciprocity. You know, while you gain, you also let other person gain. It is not like only take and don't give. Then somewhere down the line, it doesn't succeed. This entire, man-made concept called globalization, it has started, you know, facing its own challenges. So also having said that, this internal versus external focus about the monetary policy design, see, in the Indian context, all has not been that great. The first RBI governor, Sir Osborne Smith, resigned. Then Sir Benegel Ramarao resigned. Then Dr. Manmohan Singh's daughter, Daman Singh, she writes a book strictly personal. In that book, she mentions what kind of problems Dr. Manmohan Singh as RBI governor 1982 to 85 had faced while managing the political pressures in terms of, you know, what is wanted the RBI to be doing against the will of the top brass. Dr. Y.V. Reddy, 2003 and 2008, twice he thought of resigning, even though he had worked as a Union Finance Secretary prior to taking up this position of Deputy Governor first and Governor Reserve Bank. Then D. Subbarao 2008-13 tenure, he wrote two books, one in 2017, another in 2024, very recently. 2017, Who Moved My Interest Rate? 2017, Just a Mercenary. A mercenary is one who does the job for his master. It doesn't bother about the outcomes, no ethics, nothing. Just discharge your duty for which you have been given some money. As the central banker, am I supposed to be simply following the diktat of, this is the context where, 3rd October 2001, Y.V. Reddy as Deputy Governor, Reserve Bank of India, the second Foundation Day lecture for which he was chief guest at IIM Indore, autonomy of central banking, changing contours in India. In that, he was referring to some 44 central banks about, do you need functional autonomy or do you also need goal-related autonomy? What should be the goals of the economy? Many of the central banks at that time opined that it has to be controlled and wielded by the political leadership, and it should not be the purview of any regulatory authority like RBI. So in recent past also, Mr. Urjit Patel, Mr. Viral Shah, I'm sorry, not Viral Shah, Viral Acharya, Deputy Governor. They chose to leave the bank. We know that Mr. Urjit Patel, it is in the grapevine, he was not very comfortable about the demonetization move of the government of India. And he tried his level best to convince, but it had to happen. So it had happened. The Central Board of Directors of RBI had met and completed the formality, but the chief man was not very happy about the entire method in November 2016. So Mr. Viral Acharya, Deputy Governor, he was not at all happy the way his domain was remotely controlled by somebody else. And he says because of personal reasons he is quit. So therefore, it is not a cakewalk the way we see the kind of coveted positions or helm of affairs of policy making for a very prominent country like India, which is number 5 today, and is likely to become number 3 in the coming few years. There has to be some kind of functional autonomy. They are the wizards. They have technical expertise on their fingertips. I had an opportunity of meeting a few past deputy governors, RBI, in bank. So their life is so busy that each day in the morning hours over a cup of tea, they'll be talking to some senior officials in the intercom about what is today's likely position, what is the pressure on the rupee vis-a-vis the dollar. So how many millions of US dollars need to be released or purchased today? This is the kind of life they start, and therefore they are very, very passionate about handling their own activities which are assigned by the bank. But unfortunately, being a democracy, you can't have a complete autonomy. In fact, there are diverse views on this, ranging from Napoleon Bonaparte to Benjamin Franklin. You have, should the central bank be given complete autonomy, or should the politicians wield the complete autonomy in maintaining the Indian economy? Sorry, an economy, not Indian, an economy.
Well, I think from my viewpoint, the tariff.
Viral, we just have 4 minutes.
Yeah, I think my closing remark on tariff, your question is the global order is going to be restored.
Okay.
To a new order. Okay. And tariff is the way. Okay. We are still away a couple of quarters for everything to settle. US and China negotiations are not going to be very easy. And since it's going to take its own time, we still have to see a lot of pain. and the only problem is it shrinks. It just adds to the problems of the US. They will hopefully not lead to death, and fingers crossed they will not go into a recession. So I think from the India standpoint, all we need to see is all we have to hope for is US not go into a recession, fighting the tariff war. Yeah.
Sir, on behalf of Affluence Advisory, I would like to extend our sincere thanks for your valuable contribution as a panelist. Your insights, experience, and thoughts, perspectives truly enriched the discussion and made a lasting impact on our audience. It was a pleasure having you on the panel. Thank you, sir.